I've sat down with Sean on many occasions, and he's really introduced this bank. We really like this bank. It's in Southern California here. And I'm going to introduce everybody else, all you guys out there, to this bank so that you guys can build a relationship with this bank as well, especially with small businesses. They do offer personal products, but with small businesses, they are really, really doing everything they can to help small businesses grow in the region, definitely here in Southern California. Sean's going to talk to you guys about what regions that he can help and serve in as well. But what I like most about this bank is that they are really just genuine people, between all the way from the president down. Like President Jim, Jim is really cool. Sat down with him as well, had great conversations, really down to earth people, welcome you in. And this is just, it's really difficult sometimes to find a bank like that will like be so welcoming, and I felt like these guys treated me really well, and I know that they will treat you guys really well. So I feel very comfortable having a conversation with Sean and bringing him on and having him introduce himself to you guys, because I know that he'll take good care of you and making sure that you're dialed in when you're ready. Sean is a vice president, relationship manager over there at Legacy Bank. I'm going to let Sean go ahead on and say a few words and open it up. Sean, thank you for joining us tonight, and we welcome you to the community. And go ahead and take over, brother.
Awesome. Thank you, Dishawn. Yeah, thank you all for having me. So yeah, my name is Sean Popp. I'm a commercial relationship manager with Legacy Bank. Legacy was, I guess, founded about 2.5 years ago, is when we actually became a state chartered bank. We're not a credit union. We're wholly owned by the Soboba Native American Tribe out in San Jacinto. So we are one of 17 Native-owned, minority-designated institutional banks in the entire country. So that's kind of what makes us special. Soboba really took a chance on opening their own bank, and took about 5 years to get going. We went through the original plans to get open, and then the pandemic sort of shut things down for a little bit. And Soboba, came through at the end, and so they are 100% our owners. So really, the thesis of our company is to work directly with minority-owned businesses and help fund minority-owned businesses to see how we can get startups, current businesses off the ground. And we also offer personal banking as well. But we're a small commercial business bank located in Marietta. Yeah, we're about 2.5 years old, and we're the only headquartered bank actually in Marietta right now. So yeah, we have a really cool story. You can see, a lot of it on our website. You can see the key players from our CEO to our board members all on the website. And we really are sort of, we try to tailor our conversations, tailor the products that we have. Because we're small, we can be a lot more nimble than the bigger banks, and offer different products and solutions, as well as, favorable rates. And we can do it all without a lot of the red tape that you might have to go through with bigger institutions. So definitely is a place for your Wells Fargos and your Chases. But for the community banks, we seem to have a niche, and we're getting ready, coming to this year end. We've been open for about 2.5 years, and we should be on target to hit about 100 million in completed loan fundings this year. So it's been a fun ride. I've been there since the beginning, since we opened the doors. I originally started as the branch manager and then kind of moved on from there. But
that's awesome.
That's it in a nutshell.
Yes. What I like about this bank, when I sat down with their president Jim, he said something that stood out to me that I thought I just kind of just stuck with me. He gave me a story about a person that they funded, and it was that what you guys have to understand is that a lot of these banks, it's not always just about your credit profile or how well you look on paper. Sometimes it's about your story. And if you can literally show them your story, show them what you have going on, some banks will take a chance on you. And that's one of the stories that Jim, their president, he sat down with us and shared this. Do you remember that story when he was talking about the vet?
Yeah, we've had a
Right.
few of them. Yeah.
Tell me about one of the stories that you can remember about how you guys helped somebody out that just, may have not have looked so great or hot on paper, but you were able to still get them funded.
Yeah. So one we actually did recently was an SBA startup loan. So that's, brand new business. They're a company, without mentioning the name, that does, they're based in the Riverside area, but they are doing really interesting electrical engine builds for trucks. So they basically take the body of a truck, redesign the motor to be electric. So you could essentially have an electric motor in a Ford, F-150. So they're doing really innovative stuff. But again, it's a startup. And I believe with this one, the two owners were actually Canadian residents. So there's another risk factor there. Because, if we lend to a startup and things start going south, essentially a non-US resident could pick up and leave, and then we're stuck holding the bag. So there's there's a lot of risk factors here with this. One, it's, technology. Why not just go buy a current electrical, vehicle? Two, you have an out of state founders. Three, it's a startup. So, we really had to do our due diligence on this. And, from most banks, we look at, okay, is it cash flowing? Are they making money? Is there collateral? And then really we look at in how I guess it comes along with the story is, the ethical backgrounds of the founders and the character. Really, that's it. You learn about 5 C's of credit, anyone that's gone through banking, and you can Google those. But character is one of the main factors, and that sits probably at home base with our CEO. So that deal was, very rocky, but our CEO went out with the relationship manager, met the founders, really got an idea of what they were doing, and we funded the loan. They actually had, I think, a grand opening, or they had a presentation. I think it was this last week in Riverside at the convention center, and they're hoping to be on their way to raise about 100 million to continue this. And so it's become a really great story with them, and we were the bank that helped to get them off the ground. So
Nice.
yeah.
Nice. One of the things you touched on just real quick, the 5 C's. I'm always stressing to everybody the 3 C's. And it's interesting that you put that in there. I hadn't heard the 5 C's. I'm sure Robert Tapino, you've probably heard of the 5 C's as well. Homo, you've heard of the 5 C's. But I'm always focused on the credit, cash flow of business, and the collateral, right? And then you threw in also the character of the CEO. That's deep, right? I don't think a lot of people put that together. People will put together their business plans. People will put together what they're trying to do with their projections, but they never really think that the bank is actually looking at them, their character, what their story is. And I think it's very important that we understand your story of what you're trying to do. You have it dialed in, especially when you're going in, sitting down, talking to your relationship manager or the bank, right?
Yeah.
It's very, very important. So I'm glad you're on. I kind of want to talk to you more about. Oh, go ahead, unmute yourself, Mr. Liddell. I'll let you go ahead and speak. Go ahead, man. All right, you're muted. You're muted. So I kind of wanted to go ahead and speak about what it looks like for someone from coming from a startup, sitting down with you, and what they're going to need to qualify for your bank's products, right? So
Yeah.
I know startups right now is really difficult for a lot of people to get approved for startups. So they're looking to work with a bank that they can grow with. So I want to talk to you a little bit about some of the products that you guys have that might be able to get them to start growing with you and then maturing with you in order to get some of the higher funding, like SBA loans and stuff like that, or higher SBA loans. I know there's some lower, there's the $50,000 SBA loan as well. I'm not sure if are you guys offering that still, and what does that look like for somebody coming in?
Yeah, so I think Right now, we're in the process of closing the smallest SBA deal we've done thus far. It's $75,000 for a cleaning service, local cleaning service. He's using it to really expand. He's gathered several more contracts. Cash flow is pretty decent, and character is good. So we referred it. I think I referred it over a little while back before I become an RM. But yeah, so we're getting ready to close that. That's the smallest one. So our kind of target areas, being a small bank, we really look at everything from the startup to restaurants. We like industrial, so industrial buildings, office buildings. Big fan of doctors. Most banks are. We will do multifamily and apartments, gas stations, wineries, agriculture or ag, retail, mixed use. So that could be, if you have retail stores on the bottom, condos or apartments on top, ground up construction. And we do that high level all the way down to, someone that is, I just finished a deal about a month ago for a brand new escape room in Riverside.
Oh, wow.
And yeah, go check it out. Enter Escape Room. They're going to be opening, I think, end of December. And that is just a couple of guys that enjoyed escape rooms. No experience, but very knowledgeable. They had good careers in tech and other things, but they just had this passion for escape rooms. And they also didn't do it as a lot of people would have taken the easier route and did a franchise, which banks typically like. But these guys wanted to really be different, and they shipped over props and stuff from overseas, and they're really building it from the ground up. And yeah, we funded that deal. So and so that's another idea. One that I just did, I closed I think 2 weeks ago, is a new company called Savage Spin. Definitely check them out. They're in Menifee, and the owner is Nikki. She's fantastic. Her and her husband are both entrepreneurs, and she just opened her first spin company, and we funded that as well. So and she had no prior experience in owning a spin company or brick and mortar. So
Gotcha.
yeah.
So say, for instance, a business owner comes in and they've been in business for a year. I remember us talking about this before. I have a couple of people who are involved in real estate, and I think you were talking to me about if they were a developer or if what kind of real estate will you guys fund right now?
So we will fund really anything. We will do land loans.
Okay.
We will do ground up construction. So I'm working on a property right now with a client that he purchased a couple years ago, a piece of property in San Diego, and he's building a mixed use property, which is several retail store pieces and storefronts, and then he's going to have 13 luxury condos on top. It's about $5 million total project, and we're funding that.
Okay.
So, and because he already owns the land, we're not making him come in with anything down, because that's enough collateral for us to have the loan to value that we need. So, yeah.
All right. Let's
So
start talking. Let's start talking high value. Let's start talking high content now. So,
yeah.
all right. So let's talk about some of the data points.
Sure.
When a person comes in, what kind of credit score do they need to have coming out the gate?
So, one thing I would suggest as a banker, if you're a business owner and you go to a bank and the first thing you ask is what type of credit score you require, they're going to know you're a rookie. So don't do that.
Okay.
Let that, if you come in and, okay, what's the credit score? What's the minimum here? As a business owner, you want to know what the rates, because that's how much you're going to pay,
Okay.
the terms. So your rates, and we are based off of prime. So the current prime rate is 7.75, and we can either be prime plus or prime minus, which means we could either add on another 0.5% or 1% depending on the complication of the deal or the vulnerability of the industry, the character of the client, whatever it is. So and so we go off of prime. Some banks use a rating system called SOFR. SOFR is another one rating scale. So yeah, so if we're using prime, that's going to be the first thing. On the back end, we like credit to be in the 640 to 650 range for a business borrower. Obviously, we want it to be 800. We want the cleanest deal possible, but we will look at a lower credit score if the deal is really viable. For us, it's more what caused the credit to get to maybe a 650. Maybe there was a divorce, maybe there was some the business was struggling during COVID and the person had to start using their personal credit and maximize that to keep the business afloat. So as long as there's a story behind why, I've seen crazier things get done than a mid-level or lower level credit score to an approval. But yeah, that would be my advice is don't ask about that right out the gate. And a commercial banker's usually not going to ask you. They're going to assume that you already have that piece taken care of.
Gotcha. That's really important. So a lot of times it's about the deal, and if you have a story of why. So you guys are forgiving with somebody who comes in with high utilization on their personal side, and they're a business owner, because you understand how that works.
Yeah, so you're saying if you have all the business credit under your personal?
Yeah. Yeah, because typically that's what we see a lot of, right?
Yeah.
We see people starting their business up and they're using all their personal credit to start the business. And then once they get in a situation, they've spent so much on their personal side that their utilization so high that they're in utilization hell that's causing their credit score to be kind of tanked.
Yeah.
Right?
Yeah. So we do a lot of those loans under the SBA 7A, and which is typically a loan that is used for startups or newer businesses. It's government guaranteed, and so it's attractive to banks. And what that means is basically the government has, through the Small Business Association program, it allows you to get a government guarantee of 40% from the government and 50% from the bank, and then the client comes in typically with 10% down, because you have to show some skin in the game with these deals. The government guarantee means if the deal goes south, the bank can go to the SBA program and collect 40%. So we're really only on the hook as a bank for 50% of that debt if it goes south. But we do a lot of those deals because the SBA 7A program can be used for cash flow. It can be used to hire new employees. It doesn't have as many restrictions as a SBA 504, where that's typically suited for real estate, land, projects, things like that. But the SBA 7A is mostly working capital, debt consolidation, things of that nature.
Yeah. And if you guys want more information on that, we did it in our YouTube channel. We went into the different SBA loans and what categories those are in. So go to your DTI Information Network on YouTube and look at the masterclass that we did on business funding, and we go into that to get more information on that. So that's good to know that you can come in with a 640, 650, and it's not just about credit. That's something that we're always stressing so heavily on, but it's good to know that there are banks out there that will look at you without necessarily having, high credit. So, So let's talk about a little bit about cash flow, right?
Sure.
So when you're looking at a bank to qualify, typically for your smallest loans that you can qualify them for, what does the cash flow need to look like? And then I know you're going to probably talk about the debt service coverage ratio as well.
Yeah.
Of course, but what is that going to look like for someone?
So for most banks, they want to see a debt service coverage. That's the calculation they use to figure out if the business cash flows of 1.25, so 1.25, meaning for every $1 of debt that we are on the hook for, or that the client is on the hook for, they're bringing in $1.25 in revenue and potential profit. So that's typically the scale that we look at. We can go lower, 1.15, but really for us as a bank, we have to, because we're small and we're highly regulated right now, need to be at 1.25. Other banks can go lower. So if you're shopping around, see where you need to be at. But if the deal's viable, usually we'll try to accommodate that cash flow.
Okay. So when you're saying when we're talking about the debt service coverage ratio, are we talking about monthly, annually? How's that look for someone?
Yeah. So if we do a projection, or if we try to figure out that debt service coverage, we're usually doing it on at least a annual P&L and balance sheet, and we're using your 2023 taxes. So we're looking at it from an annual standpoint. Now, if this deal is projection based, which means you're coming to us and saying, I'm going to start a smoothie shop, and I've been in the smoothie game for 15 years. I know what I'm doing. I just need help getting started. And my projections over the next 24 to 48 months are this, which I've never seen projections that go down. They always go up by 25, percent, because everyone's excited. Then we have to look at, okay, what sort of collateral are we gonna look at if this goes south? Do you have a current job, that's going to pay you? How are you going to make money in the interim of getting to this, potential cash flow up here? So that's really what banks look for. And what I would caution you is really do and I can send out a template for projections that you can use, but really get a good understanding of your particular industry and what projections actually look like for you. Because if you go into a bank and you come in and, we had a client come in recently, and they're in the entertainment business. Now, they made $6 million last year, which is fantastic. They've represented some of the biggest names in music. But 2022, they made like 60,000. And then 21, they made even less than that. So, I mean, talk about, a huge jump in salary. And so when they come in asking for a line of credit of, $1 million because they need that cash flow in the interim of getting paid from all these other labels, that's not something we're going to look at as attractive, because they haven't had the history of making that kind of money. And the entertainment industry is very volatile. So really know what you actually need. Could this person get away with maybe $500,000 or 250,000? What do they really need, to get themselves to the next step? And people are thinking long term. It's like, I have to get this $1 million or I'm not going to survive. They're thinking 5 years ahead, which really, think about a year ahead. What do you need to get you to the next level? And then if you've paid as agreed, your business has grown, you've really, you're doing the due diligence to stay healthy in the business, we can always increase that line of credit or loan, and grow with you. That's what banks really want to do, is we want to grow as your business grows and keep that relationship forever if we can. So
that's really good. Let's start talking about a little bit about, that's really good. I've mentioned that before, understanding your industry, right? And understanding also how much that industry makes. And then if you're a startup, being able to know what your industry is making, and so kind of giving a gauge of what you're trying to get to, right? So that's really good that you brought that up. I'm going to also kind of address, I know some of the people in here are some of our clients and they own businesses as well. So I'm going to kind of gear some of the conversation behind that to them. We have a couple of people in here that are starting their own home healthcare business, right? So they're buying the property, they're looking to buy the property, they're looking to fund it, get it going. They're getting experience in it right now. Some of them already have experience and that kind of deal. So with them, and if we're talking projections, what do they need to do to get qualified to come into your bank to get funding?
Yeah, that's I've actually done a couple of home health care business loans already, two that I can think of right off the top in LA. And the biggest concerns with home health care are how long are the tenants or the current people contracted for? Is it month to month? Do you have them on a year, lease of that? What is also going to make you unique from the home healthcare business down the street? Let's be honest, home healthcare is a lucrative business, so a lot of people are looking to jump into that. Do you offer meals on wheels where the meals come to the house? You offer medication management where you have people that can drop off the medication. Do you offer, I've seen places that offer someone from a salon that comes and does hair and stuff like that. So we really look at it holistically. What is your niche and going to make you different? Now, if there's not a huge niche, that's not a big deal, but those are going to be kind of the key factors if we're going to invest in a startup home healthcare business. So that's one, is what kind of niches do you have? What sort of rental agreements do you have with these folks? And then another major thing is the insurance that you have. Home health care is unfortunately subject to a lot of lawsuits, mostly by the family members of the people that are there. And so we want to know what sort of insurance coverage and things like that you have. We usually will require some sort of insurance from you in the event that that happens or you pass away and we have to potentially be on the hook for that business. So those are really kind of the three major things that we look at when funding a home health care.
Okay. And so it's better if they already have their home healthcare business already established, they already have that, and then they're working with that. We have I can think of one of the people right now, they're looking to buy into one, but then there is someone who is looking to jump into it, right? So how would could they work with you to get it started? Like if they needed working capital so that they can start getting everything together.
Course. Yeah. And we would likely, so if you're buying a home healthcare business and property, we would probably do a combination of a SBA 7A and a 504. So we would do the 7A for the business and then the 504 for the land. Because one, it's going to be cheaper out of pocket, probably 10 to 15% down versus a conventional loan that would require LTV of probably 65%, so loan to value. So you would have to come in with, if we're at 60%, you're coming in with 40%, 65, we're at 35%. So with SBA 7A and 504, you're typically coming in with 10 to 15% down on that business. And so, yes, we would. The main factor that we're going to look for a startup with that is going to be the management's resume. So the owner, what sort of background do they have? Do they have any experience in the home health care? What does that look like? Is this something they just started? And then if not, is the business that they're purchasing, are they keeping the employees on board? Say there's a manager right now that's in charge and are they going to keep that person on board or do they plan to fire them and get somebody new? So that's really kind of the thing. We want to make sure that you know how to run it. And if you don't, you just want to own it, you have the proper people in place that can maintain the business to the current capacity that it's, creating revenue at.
Very good. Very good. And then let's see. And then so also, what about real estate investors? This is very difficult right now for a lot. I know it's a risky industry, and I know a lot of national banks don't want to touch it, but some of my clients are real estate investors. How do you handle real estate investors, or do you guys ever work with them at all?
Yeah, we will. So say if you're buying like a log cabin in Big Bear, and I just saw somebody post something about an Airbnb. If you're buying a log cabin in Big Bear and you want to turn it into a donut shop and it is zoned for commercial, we will do that. Say it was a single family residence, but now they've been able to get it zoned for commercial just because of the way the property's mapped. And now they want to turn it into this donut shop, we can do it. If you have four units or more, we can do that. We don't do single family mortgages. That would be Topino's, Robert Topino, who's on the call, who's a fantastic broker. That would be his area of expertise. But we will do commercial, four units or above. We will do those. Absolutely.
Okay. Very good. Very good. All right. And so what are some of the loan products or finance products that you guys have there at Legacy?
So we offer. I'm a conventional relationship manager, so I do just the black and white. Uh, a client wants to purchase a building or a gas station, and they have some money saved. They want to come in with 20 to 25, 35% down payment, and usually those clients have been in the business for a while, and so those are the first type of deal that we do. We also have an entire SBA division, which I also will do SBA loans. So we'll do a SBA 7A and 504, like I had mentioned earlier. So if you're looking for startup funds, you've been in business for a year and you're looking for working capital because you're starting to grow, or you're about to bring a new product to market, or you've been in business for a couple of years and you want to buy your first piece of property, but you don't want to come in with 25 to 35% down, we look at a SBA 504. And so we have that product as well. And then we also have for clients that might be a little bit, say they've been in the business for a year or two and they don't quite have the collateral, say they don't own any property at all, but the business is valuable. We also do a state guarantee program through a company called PCR. And you can actually research PCR online. PCR will actually guarantee 80% of the deal.
Wow.
So it's crazy. Yeah. So the state guarantee will do 80% and they do up to, I think, 650,000. So it's a good chunk of change, at an 80% guarantee. It's very attractive for most banks. So I'm doing a loan for a client right now who's got a great contracting business. He's made money, but he's never really paid himself. He's kind of bootstrapped himself the whole time, but he owns no property, has, less than a couple $1,000s in the bank, but his business is viable. And he's a military vet. He's a minority owned business owner that knows what he's doing, and he's getting contracts in. He just needs help getting off the ground, and we love that. That's right up our alley. So
Gotcha. So let me ask you this. This is really good. So we have some people on the call tonight that they come to me and they're like, "Hey, Dishawn, hey, I have a lot of collateral, right? And we're trying to get our business started and set up. So we've helped them start their whole business up from the ground up with getting all their compliance things together as far as their state documents and their website, business email, all those kinds of things. Everything's lined up. They got equity, and now they're looking to start a business, buy a business, start a business up. Well, how much of their collateral will you use or will you be able to use to help them get qualified for lending?
So it kind of depends. Usually we don't do like a percentage. There's no way, unfortunately, to do like a percentage of, well, at least with us, of say your home's value. If we're doing, say you own your home, or you have typically at least 15 to 25% equity in the home, we're more than likely going to put a second mortgage or some sort of blanket filing on that. If you don't have, a home and you just have a lot of equipment, we're going to do what's called a blanket UCC filing. So we're going to put a filing on the equipment that you own. In the event that the business goes south, we will at least be able to hopefully sell some of the equipment to make the bank's money back for our owners. So, but again, if you're coming in and you have a couple pieces of property, say the amount that you're looking for is about $1 million, and you have two pieces of property worth 600,000. It also depends too. We might only need to do one property. We rarely cross collateralize, which means we're taking multiple pieces of collateral from a customer. We really try to avoid that. So if we can get by with one piece of collateral, then that's usually enough.
Okay, got it. Let me kind of look through the chat, see if there was some questions. I know people were talking about some stuff. Let's see. Is Airbnb income good for a short-term rental business, and use those projections as projections to get business funding?
Yeah. So if again the Airbnb was, say, so one of the deals that I did is in Temecula, and It's a sort of a bed and breakfast, but they Airbnb the for like luxury apartments when the season is slow. Yes, we will absolutely look at that. It's going to be on the tax return, so hopefully, so we will look at that.
Okay. So typically the business needs to have at least 1 year in business for you to work with them.
No, on a conventional level, yes. From an SBA standpoint, no. SBA, we have done several startup with no experience in the business. So
Okay. So say a company comes in. So for instance, a company comes in, they've been in business for 3 months,
yeah,
right? Um, they've been in business 3 months, and you're going to want to make sure they have some kind of experience in whatever they're doing, and some kind of way they're going to be able to pay the money back, is what I'm getting from you, right? So some kind
yeah.
of
So yeah. And well, I mean, hopefully if they've been in business for 3 months, they definitely have some experience. Some folks don't, but say they are trying to purchase a business because they see it as a good long-term investment and they're going to keep the current employees. So it's going to be able to run itself with those current employees, or at least the management team. We will lend based on that projection that, okay, the manager is going to stay. You're buying a pizza parlor. You don't know anything about pizza. You just like it. But your chief pizza officer, the guy that's been making pizzas there for the last 15 years, is staying.
yeah.
He's gonna die there. We would absolutely lend on that because he knows how the business runs. You're going to be the owner, but you're keeping the key employees. So
Gotcha. So you're going to be looking at, are you going to look at the businesses the business that they're buying? Or are you going to look at their income that they've had?
yeah, ideally what we will do is we will want to see, if we can, we try to get tax returns from the business that's being, sold. We're not always successful with that, but we at least try to get, P&L and balance sheets of those businesses to see, kind of where they're at. And that's how we'll, base the structure, whatever that deal is, the terms, the rates, and then what collateral we decide to take.
Gotcha. So let's talk documents. Let's talk docs. This is kind of an important, it's kind of like it's always like the elephant in the room when you're going to talk to the bank. What kind of documents does somebody need to come in with when they sit down with you, Sean? I know you're really good with being able to sit down and talk to them and let them know everything that they need to have and what they don't need to have. But typically, if they say, "All right, I'm ready. I want to go and get this business started. I want to talk to Sean about lending." What do they need to come in with to talk to you?
Yeah. So how this will typically start? Oh, do we have a question?
Of blowing up.
Sorry, Jackie, you're unmuted.
And going viral. Or
Homa, can you mute? Can you mute Jackie for
evergreen
please?
Video. I'll talk to you guys what that is.
Thank you.
Cool. So if you're how the process starts is you come into the bank, you'll talk to me about a business idea or a current business. In the event that, okay, so we get to the point where the bank likes it, you like us. What will happen is we will issue typically a term sheet or an LOI. So LOI stands for letter of intent. And what that means is we are interested in doing the deal with you. Most of the time, the LOI, well, all of the time, the LOI should have whatever the current terms are, how many years it's going to be. Is it going to be a 5-year, 10-year, 25-year, and what the amortization schedule is? What fees are going to be included in this? What rate? And then any contingencies, just like a mortgage. What contingencies are there? Now, that contingency could be, you have to open a bank account with us. You have to bring a certain amount of deposits with us. Something like that. So every loan, business loan or mortgage typically has some sort of contingencies usually. After that, you will get normally a needs list sent by the relationship manager. And for conventional, needs lists are not usually super big, but for the SBA side, because it's a government guaranteed product, the government wants to see everything, and there's paper trails for everything. So it's vast. The SBA needs list is really big. So don't get scared of it. And I can send samples of what those look like to Dishawn after the call, and then he can shoot them out to you guys. But high level, we're looking for typically 3 years business tax returns for the business, and then 3 years personal tax returns. If you don't have, if the business is not operating, then we're looking for your personal. Then we're looking for a current, up-to-date personal financial statement, or a PFS, which is really going to outline all your debts, all your assets. Then we look for a current business debt schedule. Does the business have any debt? What are the monthly payments there? On the SBA side, we look for a management resume. We look for 24 to 48 months of projections, which we will provide you with that worksheet to fill out. We will look for a 4506 C, which is the availability for us to pull tax transcripts to make sure the ones that you provided us are the ones you provided the tax man. And then a variety of other things like the business application, so on and so forth. So really what you need to be prepared with mostly is just the tax returns. So a lot of people get hung up on the tax returns. People like Dishawn and Homa, they can help you fill out our documents, because there's a lot of kind of very particular ways you have to fill those out. So if we send it out and it's maybe a little bit more complicated, Dishawn and Homa, they can help you do that. But a lot of it's also pretty self-explanatory: name, social, birthday, income, things like that. When you get into SBA is where it gets a little bit more complicated. And, if we have clients like that, Dishawn and Homa will, reach out, and then we can kind of guide them in the right way.
Yeah. We also have, you guys, Mr. Medina, who is our ADP rep. I know we had a call earlier yesterday, or last week, we had a call on ADP. And Roger is amazing with helping you guys with your payroll documents and making sure that if you are already in operation, you're a small business in operation, they do everything from making sure that all your documents are in compliance, and then you're paying yourself out as a business owner. You are actually giving yourself a salary. And Roger, are you still on? Are you on right now?
Yes, sir. I'm here.
Excellent. I just wanted to introduce you because we didn't introduce you in the last call. We had Ruby on last week. So I just wanted to make sure we let all you guys know, if you're looking to get yourself on payroll, we have Roger Medina here that's going to also be able to help you guys get that taken care of. Did you want to say a few words, Roger?
Yeah, 100%. So again, guys, thank everybody for being on and for welcoming me on the call. And kind of what Dishawn touched on, guys, like my specialty is payroll, workers' comp, employee benefits. And part of the partnership with Dishawn and Homa is a strictly educational conversation that revolves around payroll, right? I think we all understand that, the federal government and the state government wants to make sure that we pay ourselves on payroll because they want to collect the taxes. With a conversation with us is about an hour, to be honest with you guys, but we go full into depth about HR services, right? How to be compliant and operate here in the state of California, and then obviously federal employer laws. I educate you guys on how payroll works. I want to make sure you guys fully understand how the employee gets taxed, right? How money gets expensed at the end of the year, and then use yourselves as employers, the taxes you'll be paying in each single bucket as the employer, as the beneficiary of the employee. Okay. We talk about workers' comp insurance as well. I want to make sure you guys fully understand how a workers' comp quote works. So that way, when you guys go to brokers or you guys go through ADP, you understand what you're paying for and where that money is going to be going and how to get those quotes. We'll talk about health insurance. If you ever want to offer health insurance under your guys' self as a corporation, right? It's a tax write-off for you guys at the end of the year. It's an expense you guys are making. Retirement plans as well, whether it be a 401k, a SEP IRA, or a simple IRA under the company, to ensure that you guys are putting money away without paying taxes on it. And then again, just employer laws you need to be aware of operating here in the state of California. So my job is compliance and solutions. Part of the partnership with Dishawn and Homa is to make sure you guys walk out of the appointment fully educated knowing how we operate. So anything you need, please give me a call. I'll throw my phone number and my email on the chat. And we're here to help out however we can. So Dishawn, thank you, sir, for having us on.
Excellent, absolutely. So the reason why I wanted you guys to bring Roger on, you guys, also is because when you're getting your docs in order and we are getting ready to sit down with Sean, I want to make sure that you have everything dialed in, right? I want to make sure that you look good on paper. So a lot of times, people aren't paying themselves a salary when you're first getting in business. And having yourself being paid on salary out of your business the right way and all lined up, dialed in correctly is going to make Sean's job a lot easier when he's looking to get you approved, right? Because he's going to be looking at what kind of income are you making? How do you look? And when we're talking about the character of your business or the character of the owner of the business, how do you look on paper, right? So that's why it's so important. That's why that we try to bring all of our partners together so that when we're teaming up with you guys as business owners, we can make sure that you guys look solid when you're sitting down to talk to people like Sean. So when we're making sure we're going over your profit and loss statements, we're making sure your balance sheet looks right, we're making sure your taxes look right. These are the kind of people that we're talking to that we're going to allow you guys to talk to so that you guys can get that education so that you look good and you can get these higher loans. Sometimes, a lot of times, I remember myself, like I would walk into the bank and not have any understanding of a lot of this stuff, and I'd be lost. And that's kind of why I started the business, because now I get to have high level conversations with people like Sean and people like Roger, people like Robert on the call, and that educates me so that I can actually elevate and grow my business, right? So sorry about that, Sean. I didn't mean to interrupt and steal your thunder, man, but I wanted to make sure that people know that they have these resources out here. You guys are still working with ADP as well, right? Yeah. I can't hear you. You're mute. You're on mute.
There's a question on chat as well, by the way. I just want you to know.
Okay. One second. I'm going to let you address the question, okay? Yeah, what were you saying, Sean?
No, I was saying, yeah, we are working with ADP, and I think Solero for merchant card services.
Okay, perfect.
Yeah.
So you guys offer business credit cards as well?
We do. Yeah, we have a couple options for business and personal credit cards. I will say we're not super competitive in that market. We are really, more of the B and C paper loans, which is, not the sexy loans. That's really our niche.
Okay.
If you're looking for good business credit cards, there's so many banks that offer, US Bank, Chase, a lot of them offer really good credit cards out there, but that are probably better from a reward standpoint than us. But we do have them.
You have them. And you guys have lines of credit as well? Business lines of credit?
Oh, yeah. Yeah, we have them both on the conventional, the state guarantee side so state guarantee and conventional.
Can you kind of talk about what that means? Because a lot of people may not know what that means.
Yeah, so it's just basically on the conventional side, businesses that have been around for a number of years, and then the state guarantee side, which is a brand new business, maybe less than 6 months old. That one's going to require more collateral for the bank to be interested. So again, on the state guarantee side, they will secure 80% of that. And so it's attractive to us because there's only a 20% risk factor for the bank with us. So okay. If you're a new business, we will do a PCR state guaranteed line of credit normally.
Okay. And what does it take for somebody to get qualified for a product like that?
So, and I noticed there was a question in there about is there any no doc loans? So to answer your question first, Dishawn, it's the same process. It's, tax returns, either personal or business, application. We require the same package for all of our loans. So, no matter how big or how small the loan is, we look for the same thing. For us, we do not have any no doc loans for high FICO individuals. All of our loans, we look at everything. We look at, tax returns, 3 years, personal financial statement, all of that. So there are some really good programs out there that have no doc loans, but we're unfortunately too small to really be competitive in that arena.
Okay. I'm going to let
But
people start asking some questions too, because I
yeah,
see
oh yeah, go
there's
ahead.
going to be a lot of questions and stuff. If you guys could just raise your hand, hit the button on your screen that says raise your hand, and we'll just take questions as we can as we come in. We're going to keep rocking out, but I appreciate you putting them in the chat. People like, I don't know, Homa, do you want to kind of guide where?
Yes, Shakur has a question. So, Mr. Shakur, you can go ahead and ask your question, Mr. Azizi.
Unmute yourself, Mr. Shakur.
Yes, hi. My question is that have your bank ever funded any RCF residential care for elderly?
I'm not quite sure what RCV is. What is that?
RCFE, residential care for elderly. It's a facility for elderly care.
So we have done, I don't know if this is, because we've only done a couple of the elderly residential properties. They were both, residential homes in Los Angeles that, had full licenses. They were again residential homes, but it was under a business, and we did fund those. I don't know if it was under the RCV or the acronym that you mentioned, but we did fund and we will fund those types of businesses.
One more question. If an individual buys a business that's already generating income, we're in the process of purchase a existing business, would that make it easier to get funded because we don't have the taxes, 2 years or 3 years taxes, but we do have the collateral we have several properties?
Yeah, so we at that point we might look at cross collateralizing the properties if we are able to get the balance sheet and the profit and loss from the prior year or two of that business. That would be ideal for the bank. We can get the taxes from them. That would be great too. But if we can't, then we're going to go based on your personal tax returns and then the collateral that you offer. But yeah, we will do it. Really kind of our niche is we try to exhaust all avenues to make the deal work if it is, a viable business. So we really try to figure out ways to, sometimes our CEO sometimes says that we're a slow yes rather than a fast no. So
if they're willing to give because the P&L is not a problem, but if they're willing to give the taxes, what would you guys do with the taxes? Just look at it to cross-reference that the business is growing or the business is making money, or is it something as a collateral you guys see?
No, so what we're gonna do is we're gonna look at so if you're purchasing the business, we're gonna that's gonna be business debt that now is going to be transferred to you, and then we're gonna also look at any personal existing debt that you're on the hook for. We're gonna then take the figures in the tax returns to assume, okay, from 23 to 24, and now say if you're buying it in 24 to 25, it's going to stay the same or similar because you're buying the business, you're keeping the people on board, like we talked about earlier, and essentially the business is just changing hands from them to you. We're going to make sure that this business cash flows. So we're going to look at the revenues. We're going to, and that's kind of where it can be frustrating if you're buying a business and say it's a bar, so it's heavily cash. And the previous owner did not put all the cash on there. They're telling you it's making $1 million a year, but on the tax return, it's only showing that it made $80,000. And so that's where it can be a little concerning unless they can, show proof of, where that excess money is coming from to make that deal viable for you. Because we will. And the purpose for us is we want to look at it to make sure the client can afford it, but then two, we also want to say, if you're purchasing this business as a new owner for $1 million, thinking that it's going to be generating that type of money, we're going to dive into the financials for you and say, actually, it's probably only worth, 350,000. It's not worth $1 million. And, it's based on the spreads of us looking at the financials. It's all black and white. It's all right there to see. I just had a situation where a client is purchasing a big warehouse, and the seller's agent was really wanting us to use their appraisal on this piece of property, and we didn't. We have to use ours, and so we got we got our own appraisal, and the business came back, or the building came back under the amount that their seller's asking for. So that allows our client to go back and negotiate, because we have this appraisal. So we look at it, one, to protect the bank, two, to protect the client, because we want to make sure we're setting you up for success.
Very good.
Okay.
Very
Thank
good.
you.
Oma, was there other questions that people had that you see on here? If somebody has a question, please unmute yourself now.
I didn't see any questions come in, but please, if you have any questions, we have experts in the house. Please ask them.
I have a question. This is James. I just wanted to kind of piggyback on what the gentleman who spoke earlier before. What type of loan did you use to fund that group home or that residential care home? Was it an SBA 504 loan?
It was,
This
yeah.
question for Sean.
Yeah, it was an
And then-
SBA 504. Yeah, because we were actually refinancing it out of hard money. So,
And in a situation like that, will we have to come in with, I think you said 10 to 15% down or something like that?
yeah, for that one particular, they had done a bunch of upgrades. And that's kind of the cool thing about SBA. And I mean, you really can do it with conventional too, but with SBA, say if you've purchased a lot of equipment, you've remodeled the homes, you've done all these things to make those properties and the business better, we can use that as the capital injection that's needed for that 10 or 15%. So you might not have to come out of pocket at all, because you already have, by making the business better than what it was.
And we can use that loan. Say for instance, because I'm in the same position as the other gentleman, I'm looking for a home now, and I see a lot of fixtures that that I want to use for it's a group home,
Okay.
nonprofit group home. Now, can we use that 504 to make the upgrades to it, like you were just saying? So, say if I need to put some tile in or some flooring or something like that, can I use that 504? Or is that just strictly for the purchase only?
No, you could definitely use that. You might want to do a 7A, so you can kind of do combos. You can do a portion of it 7A. It's probably cheaper to do it that way, to where that's going to be working capital for T&Is, tenant improvements. So you're going to have a working capital loan here, and then you're going to have a purchase, of the actual property itself using a 504. And then what we do is, typically for SBA 7As, the rates are higher because, again, it's startup.
I was just going to ask that.
Yeah. So it's the rates usually for us at minimum are about prime plus 2. So 775 plus 2. So we're 975 is where we're at. And which is pretty good. There's SBAs out there that are prime plus 4. And then, but on the 504 side, looks more like a conventional rate. So you're probably at like prime, maybe plus a quarter. And what we will do is we'll do a blended rate of the two loans, and that's what the actual rate is that you're paying.
Yeah, that's what I was going to. Yeah, okay.
Yeah.
Perfect. Thank you for answering that question for me, Sean. Appreciate it.
Yeah, of course.
Yeah. And then with equipment loans, a lot of people are interested in equipment loans. So I have some other people who are on here that are looking for equipment loans. How do you guys lend for equipment financing?
Yeah, it's a very similar process. So if you are, an example is you're purchasing. I have a client right now that is purchasing equipment. He's not a contractor or anything like that, but he's purchasing equipment because he needs to depreciate his taxes. He made too much money last year or this year, and he's expecting a big tax bill. So he's purchasing heavy machinery, and he's going to lease it on a website very similar to like Toro. But he can take the full depreciation right now, as well as receive rents for when his equipment is used. So we go through the same process. And with that, because the client, has good income personally, we're just going to do a UCC filing, which is basically taking the collateral of the equipment. He's coming in with what is he coming in with? Usually equipment deals, he's coming in, usually they're 25% down, 25% down. A lot of people do more. He's doing much more because he wants lower payments, and he's not really worried about the payment. He's just trying to depreciate. And then, yeah, equipment deals are very simple. We can churn those out pretty quick.
Okay. All right. Got it. And all right. So that answers a lot of my questions. Did anybody have any questions they wanted to bring up to Sean?
Yeah.
Mr. Oh, go ahead, guys.
Oh, no, I'm sorry. Go ahead. I can ask after.
No, you're good.
Okay. I have a quick question. I don't know if this is kind of in what you do. I fell off of the Zoom a couple of times and logged back on, so I missed some of it. But I have a friend of mine that posted on Facebook that they're looking for somebody to help, kind of like a hard money lender, I guess, because they have a client, they're a realtor. They have a client that's looking to buy a church in LA. Is that something you can help with?
Yeah. Yeah, we actually just did we just closed a church deal recently for, I think it was about $3 million. But yes, we will loan to nonprofits. We will do churches, which is kind of unique. A lot of banks shy away from nonprofits and churches because they don't want to foreclose if, that's bad publicity. If you foreclose on a church. So, but we will definitely do it. And it won't be, we don't do hard money. And if it's if this person is purchasing a church, are they a pastor?
I don't know. It's a client of mine who posted on Facebook, who is a realtor. And so I just responded a couple of days ago. I said, hey, let me ask around. If I meet someone, I'll connect. So I'm not sure all the little details. They just have a client that they help with residential real estate, of course, but that client is looking to buy a church. I don't think they're looking to buy a church to open a church. I got to remember, I think they were looking to buy a church building. I'd have to go back and look at the post.
Yeah, well, we would likely do it. We definitely lend to churches. I know that much. So yeah, feel free to have them reach out or connect us.
If if you can text me Sean's info, Sean, I'll pass it on. My friend's name is Edwin. I'll reach out to him and I'll pass it on to him. Okay.
Sounds good.
All right. Thank you.
Absolutely. And just for the record, he's actually, Mr. Singh is, he's from the Temecula area. So you're very much close to Sean. So perhaps you can meet him at his branch.
Yeah. Where are you located, Sean?
We're located at 41391 Calmia Avenue in Marietta. So we're off the 15 side of the freeway, right across from Kohl's. We're in sort of a industrial office area.
Okay. Homa, if you could text me that. I wrote it down, but if you could just send it. I just moved to Temecula like 3 months ago from Vegas.
Oh, nice. We'll stop by.
Yeah, absolutely. I'd be happy to.
That's awesome. Definitely.
All right. Mr. Liddell, did you have a question? I know you've been trying to ask a question. I don't want to get out of here without you being able to ask your question, Mr. Liddell. Did you want to ask a question? Please hit the unmute button. You got to hit the unmute button if you want to ask a question, okay? We can't hear you. I'm sorry, Mr. Liddell.
So let me go ahead.
I think the host click on the person's name and have them unmute.
Oh, we got him. He's
You got me? You got me? Oh, okay. Do you have SBA loans for retirees, and how do we get started doing it?
Yeah, I mean, we offer SBA loans to everyone. So if you're looking to start a business, you know, that's definitely something that we would do, retired or not. And I'm assuming you're receiving some sort of a retirement.
Yes.
Yeah. So, but yeah, we look at all deals.
Oh, okay. Thank you. Yeah, I'm trying to open up a day program, but I've been having a problem. I think I did a little hiccup at the bank, but I rescheduled an appointment because they were asking me some questions. And I think I wasn't prepared, but I think I'll be on my P's and Q's this time.
Well, I would, yeah, definitely talk to Dishawn and Homa, and that way they can get you prepared for that visit. Feel free to, you know, reach out to me as well, and I can do the best I can to prepare you and just talk, you know, very high level about what you're looking to do. Of
Okay, thank you.
course.
All right. And you guys you said you do offer personal products as well. Would you be a good bank for the client to build out a personal relationship first?
Yeah, we're right now, I mean, from a savings and CD standpoint, we're offering some of the best rates in the Inland Empire. We have CDs at, you know, 5%, money markets at over 5%. So we're offering some really good products there. And we do have some pretty competitive car loans, you know, from a pricing standpoint, and, you know, personal loans as well. So yeah, we do offer that. Not, you know, we're not super niche in it. The process is much easier than, you know, getting a commercial deal done. Much easier. Our turnarounds, you know, a couple days usually. But we have the same underwriters for everything. So you know, that's the only process that could take a little bit more time. But yeah, we can definitely do it.
All right. All right. Does anybody else have any other questions that you guys wanted to address with Mr. Popp while he's here? If so, now is your chance to ask a banker questions. No question right now is off limits. Make sure you get all your questions answered, because next time you meet with this guy, he may be sitting at a bank, and it might be a little more aggressive than what it is right now, sitting back on a camera, just wanting to be able to get your questions answered. All right. But if
I've got a couple questions, Dishawn.
Hey, what's happening, Donald? Donald runs a business over there. Where are you located at, Donald?
Minnesota.
Okay, he runs a business out in Minnesota. Go ahead, Donald. What's happening?
Yeah, so a couple things. I appreciate the Zoom call. Sorry I wasn't able to get here on time. I was finishing a job, but you know, I might have missed out on a couple of things. But one of the things that I wanted to ask is, we've been in business for coming up on a little over 4 years now. And obviously projections are up. We've hit the ground, taken off, and was kind of concerned about that because you know, when does the hiccup come? And so I think we're experiencing some of that now. But the problem that we're having, and I would like to know if you work with, I own a cleaning company, and one of the things we're getting a lot of, you know, I don't know, marketing material, or people wanting to, you know, banks coming saying, hey, we can help you with capital, things like that. And so we're very hesitant at doing it at first because, you know, just because someone's coming to you offering you a whole bunch of money, you know, you don't want to get in trouble with, okay, are they legit, things like that. And there's some of these banks I've never even heard of. So one of the questions and concerns that I have, and maybe Dishawn, you can maybe talk with us afterwards, but I entertained it. I, you know, spoke with a couple of them, and they are asking for, you know, what your company is making. They want to see all the documents, things like that. And so what they come back with is like, yeah, so we can supply you with a loan, capital, whatever you're going to need. And it all sounds great initially. And then when you get down to the nitty gritty, they're saying, well, this is a daily loan, so you have to pay back, you know, $306 a day. And I'm like, oh, heck no. And it seems like that is the thing that we are currently bumping up against, and which also I'm not able to take on more jobs because I don't, you know, I'm not able to, you know, pay people. And that is a problem because now I'm at a standstill and it's actually hurting us. And so for a person like myself in a business that I operate, what would you be able to do, or can you even work with a company like mine to be able to kind of look at what we have and continue to, I don't know, maybe offer things so that we can benefit and keep going up? Because like I said, I'm at a standstill now, and I think it's because the obviously I don't, the capital, so to speak, or the overhead to be able to have a payroll that would support me being able to support the new growth and business that I'm losing out on, because it's quite a bit and it's definitely frustrating. So that was the question number one. And then going into question number two is that we are actually looking at going into, I guess you would call it corporate leasing, so to speak. I mean, it's more along the Airbnb, but we actually would be working with different companies here and providing housing, whether it be studios or 1 bedroom or 2 bedrooms, or renting out homes of owners, and being able to provide them with housing while they're here, and utilizing the cleaning companies to help support that. So obviously wanting to start a new business in that regard of the, corporate or Airbnb market, but more importantly, how are you able to help a cleaning company where we're looking for capital or payroll so that we can continue to grow and not be stagnant and start to decline? And that's one of my biggest concerns.
Yeah. So, yes, to answer the question, we do work with cleaning companies. We've done a few loans. The small loan that we're doing right now, the SBA, it's a 7A for a local cleaning company. It's like $75,000, just because he's growing, he's getting more contracts, he's hiring more employees. So to answer the question, yes, we don't lend to companies outside of California, unfortunately. So unless because we're so small, unless the headquarters is based in California, and then say there you have a satellite somewhere else. But what I would encourage you to do is call around to independent community banks. There will likely be a bank out there that will do exactly what you're asking for. There's actually if you Google like MDI institutions, minority designated institutions or minority designated banks, those banks typically tend to be a little bit more risk adverse, and they will they'll take chances with stuff like that. But I would start with the community banks. The bigger banks might be a little shy to do something like that, but the smaller community banks would definitely do it, and that would be in their wheelhouse.
Yeah, and I'll piggyback off that real quick, Donald. It sounds like a lot of lenders that they're coming your way, they're predatory lenders, right? They're MCAs, merchant cash advances, and you have to be very careful with those. Yes, it'll be easier for you to get some of that type of lending, but you're going to be paying some of the highest interest rates imaginable. So you have to be very, very careful. I can send you a list of MDIs, like he was mentioning, and CDFIs as well. Make sure you remind me, and I will make sure I get you a list out there, and hopefully we have some in your area that can help you out, okay?
Appreciate that. Thank you.
You got
and
it.
if you can, for anyone on the call, please avoid those merchant card loans. If you can. I've refied several customers out of those, from low, starting businesses all the way up to a dentist that, just needed quick, fast cash, and they got them. And all of a sudden you're paying interest rates, 90%, 100%. You're paying $5,000 a month for nothing. And so, it's very predatory. I'm glad you mentioned that, Dishawn.
Yeah, absolutely. Yeah, got to be very careful with that. Kiana, I know you had a question earlier. I'm not sure if we were able to answer your question. It's Airbnb question. I think we kind of answered that one, didn't we? As a startup, I'm a licensed pro in the real estate industry, for example, please. I think we kind of answered that question. If not, go ahead and unmute yourself. Otherwise, guys, thank you guys for joining the call tonight. I hope you guys got some good information from Sean tonight. Thank you, Sean, for dropping in. I appreciate all your wealth of knowledge and information. We definitely want to keep sending people your way. Sean will definitely, if we can't help you, please feel free to tap in with Sean. He is really good with being able to show you how to fill out the documents that he's saying that you're going to need. I'll make sure that everybody can have access to Sean's information. If you guys are not in our school group community, join the school group community. I'll put Sean's information in there. You guys can just let him know that you were on this call and that you work with us, and he'll help you. Matter of fact, Sean, Homa, can you put the link to our school group community in the chat for us, please, so that Anybody can get that? Do you have it?
Absolutely, I do. And also for everyone that's joining in this Zoom session, you can get everybody's contact requested through the school group, and all of the information will be given to you. So let me get that.
All right. Sean, did you have anything else you wanted to say, bud?
No, thank you so much, Dishawn and Homa, for having me tonight. I look forward to working with as many of you as possible. If you guys have any questions, reach out to them. And I look forward to working with you, and good luck with your businesses.
All right.
And here is the
You got it?
school group. Yes, got it. All right.
And
This
then
was
if
great.
you guys want the replay to this and you want to hear this again, we'll also have it on the YouTube channel, the DTI Information YouTube channel. Please go subscribe. We're going to be doing calls like this at least 2 to 3 times a month, where we're going to have different professionals on here sharing their expertise, giving you guys value, giving you information to help you grow and scale your businesses. So please join and subscribe to the YouTube channel, DTI Information Network. Can you put that in the chat as well, Homa?
Yes,
And then,
indeed.
And then you guys can go back and watch this. And then if you want somebody else, to get this information, feel free to have them watch it as well if they missed out on it. It looks like looks like Mr. Singh is requesting your contact information. Also, guys, if you're not
He sent it to me. Sorry.
Okay,
He
perfect.
sent it to me. I have some clients in Minnesota, and I think I can help promote his cleaning business to some of them. I hope that was okay to post on this chat, by the way.
Absolutely. It's all about the network. I'm glad we can actually network and help each other out. Join the school group community, guys, and that's where we can all network with each other and help each other out in the school group as well. All right.
And also just quickly, so the school group, you can actually post your like, for example, Mr. Singh, for you would be ideal to post any information, updates on everything that you're doing to get everybody going. And also, Mr. Singh wants to stay with the Zoom D to talk to you and I for a little bit. So if you can hang on there, that'd be awesome.
All right.
All right.
Thanks again,
Thank you
Sean.
so much,
Thank you,
Sean.
guys.
Thank you, everyone.
Thank you.
Thank you for coming
Thank you
out.
so
Have a good
much.
night.
All
Anytime.
right. Thank you. Bye-bye, everybody.
Thank you.